Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we are going to take a look at the US debt markets. In particular, we will be taking a look at the US Treasury bond futures. This video is for educational purposes only and it is not a financial advice. New subscribers, welcome to the channel, and returning subscribers, thank you for watching the content. Okay, so guys, before we begin, what we are looking at is the United States 1-month government bond yield daily chart. So here what I want to point out is, as we have been pointing out in the previous videos, here look at the rise in yields over a period of 5 weeks, 5 to 6 weeks, and the discussions about the US debt ceiling still are not clear. However, on last Friday, we saw a good rally take place in the US stock indices, in particular in the Nasdaq tech-driven stock index, partly due to the AI-powered stock Nvidia, and also we have seen a rally come in the S&P 500 index as well. So what I want to point out is, look, if you look at here, what is happening is that the yields are in a sideways range. In fact, over the past 2 trading days, the yields have tried to spike up as we move closer to the end of this month, and next week is the end of the month for May, and we'll be really getting close to the 5th of June, the kind of the X date which is available for the debt ceiling matter of things. What we have seen is that market tries to rise up, but then it gets sold off, and this is just, I want you to just pay attention to that, just be aware of it. So what we are now going to take a look at is the US bond futures market. So this is the long future, which is the 30-year Treasury future market chart here on a daily basis. And here, one of the things on the longer term chart I want to point out is the concept of symmetry. So here at Market Chart Pattern, one thing we really like to emphasize on is that markets like to repeat over and over again, and this is the geometry of the market. And here what we have seen is the rallies. So let me actually go back, zoom out a little bit. Rallies taking place of this much magnitude, and every time they get sold off or they receive high, really strong resistance, and this is exactly the case. So look at the rally which took place here over a course of few months, and then the similar thing here, and price is just going sideways to down now. But what we were also anticipating was a pattern formation, which is highlighted in the yellow here. We were looking for an ABCD formation to come right here, and also a 61.8% Fibonacci retracement coming around 127.08 level. So the bonds are traded into the second, so each tick is about $31.50, and it trades in the seconds. You can look up the definition on the website. If you Google US bond Treasury futures, it will give you the prospectus. So that pattern failed clearly, but there is an important support available. And here again, if we look at, this was the decline which took place over the course of several trading days, and if we just project this decline from the top, which was reached recently on 5th of April, we have the market actually trading right at the 78.6% Fibonacci retracement, and we have the market symmetry of this down move coming in at around 124.07. So that's why we are watching this level very carefully as well, because here, if you look at the market had actually, if we just draw a trend line like this, the market had found support from the 61.8% Fibonacci retracement. In fact, it broke below that, then it found a really nice strong day, and then it went up. And here the most likely outcome why this pattern might have failed on a fundamental basis looks like to be that because of the issues going on with the debt ceiling talk and no clarity being available, and we are heading into a long weekend. So those sort of things probably led to a more severe sell-off, and our support, or the level that we were watching for it to find good support, probably broken down. Because of that, again, we focus on technicals here, and that could be one of the reasons. But given this fact, and also the fact that if over the course of next week the debt ceiling stocks they resolve with a positive outcome, then we could be expecting a very nice rally in the US bond futures market. Also, that would probably translate into a rally into the US stock market as well. But we'll have to wait and see how the next week will unfold. Also, from an equity indices perspective, the video which was done last week, the markets such as the NQ100, they are actually trading right at some really critical levels of resistance. We'll also be watching that. But again, in terms of the long bond futures, the 30-year Treasury bond, we need to pay attention to 125 to around 124 level, if whether it's gonna hold or not. And any, in my perspective, any good news coming out of the debt ceiling talks would actually cause a rally in this market. Let's also take a look at the 10-year Treasury notes. So this market is actually bigger than the 30-year bond futures market. And here we have something similar actually, but slightly different in context as well. One of the things is that this one has not reached the 78.6% Fibonacci retracement, and also it did break below the 61.8% Fibonacci retracement. As far as the market symmetry goes, the market symmetry is still bearish for this one. We can see that this was the magnitude, similar magnitude rally, and it's just gone nowhere. And if we were to look at the last move here to here, we copy this and we project it from the recent highs. It will take us just like the Treasury bond a little bit below the 78.6% Fibonacci retracement. Again, we'll have to see when this reaches the 78.6% Fibonacci retracement at 111.28 level, how the market is going to actually trade from a price action perspective, and just drawing a trend line support. It also comes around the 78.6% Fibonacci retracement. So that is going to be the next key support level that we have to watch. Again, fundamentally thinking that any positive outcome of the debt ceiling talks is likely to relieve some pressure on the bond markets, and we could anticipate some sort of a rally, which could actually also help propel a rally in the stocks as well, US stocks we are talking about. Okay, so here that's what we are looking at in brief. If you like how we look at the markets and do our technical analysis, looking at pattern recognition, pattern formations, and Fibonacci ratios and market symmetry, please do subscribe to this channel. And if you found this video of educational value, then please hit that like button. Just personally, that way it gives me an indication and a nice feeling that people find the content nice and good for educational purposes, and it just encourages me to bring more and more videos out for you guys. While we are here, let's also take a look at the US dollar. So look, this is the US dollar index, and this is the daily chart. And what we are looking at is a rally taking place over the course of a few weeks. In fact, since the beginning of May, and we are approaching the end of the month. So here, again, in times of uncertainty, a lot of investors actually begin to go into US dollar as a safe haven asset. So here what we are looking at is for this rally to perhaps continue. It could even go to 106 level right here, where we have the 38% Fibonacci retracement. Also, we'll have a double top formation coming in from the resistance on the left hand side. In the longer term, our opinion is that US dollar has stopped on the channel. There is a video, I'll try to find a link to it, post it at the end of this video, and also I'll try to post it in the description. We have done a video on the longer term symmetry, going back to the early 90s, and in our opinion the US dollar probably has stopped longer term. However, it doesn't mean that we cannot have really strong rallies in this market. In fact, this is what really happened in the early 1990s, and although the dollar topped and it began to decline for several years, but there were some really strong rallies which also took place. So guys, this is what we are watching in these markets. Thank you very much for watching. Good luck and good trading.